Welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this cloudy Wednesday. I think it's Wednesday. I hope you all had a great week so far. As always, in this stream, we're going to take a look at my portfolio, my position, and my positions and my forecasts for certain stocks and indices. Before we do that, however, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Last but not least, everything that I'm using, so the charting software, the broker, the strategy I'm following, and so on, is linked in the description down below. And the one thing I recommend, if you haven't already, is follow the link, check out the Elliott Wave principle. You can read it online for free or get yourself a physical copy. Plus, on top of that, I don't always mention it, you can also find a one-page cheat sheet that summarizes all the different Elliott Wave patterns on one simple page down there as well. With that said, let's jump directly into it. I'm gonna hide that. Hi, Olga. Again, I have trouble remembering your actual name, but welcome. Great to have you here. Yes, immersion is actually taking off. I, however, sold my shares today at $30.50 or $30.45 effective, as we can see down here. Or we cannot, can we? Mostly because from my rough labeling, I see we're gonna work on that in a second, and we're gonna work on it from the beginning. So from a higher time frame. But I noticed the increase, and I saw, based on the labeling, that I assume that this is a wave 5, and that wave 5 would have a first profit target at $12.19, and the, in quotes, maximum profit target of $14.46. So doesn't mean that we cannot go higher than this. It just means that reasonably often, in my experience, we will have a turnaround here, which then would turn all of this in some 5-wave pattern, followed by a corrective pattern. And so I decided to sell the handful of shares that I held in order to potentially re-enter better. So as said, we're gonna look into immersion closer in a minute. We're just quickly going to catch up with the rest of the stuff, starting with Barnes & Noble Educational. So still moving sideways. We're still waiting for the pattern, basically, or for a pattern to show, to make this in some kind of 1-2, and then from here basically have a wave 3 upwards. Remains to be seen if that happens. But until that happens, we're just going to hold a few shares. How many do we have? I mean, maybe we increase the position as we go. We only hold 10 shares right now. It would be nice to get to 100, although for Barnes & Noble Educational, there are no options, so no additional income through selling covered calls. So probably, we might still increase the position as we go once I free up some capital. Next one, Faraday Future Intelligence. So there it still looks possible, or nothing changed. In the stream on Monday, I went over those things in greater detail, so you can check them out there if you want. But on first glance, there is a chance that basically the downwards trend is over, and that this is either 1, 2, 3, 4, and we'll get wave 5, or that this is 1, 2, and from here we'll now slowly get 1, 2, 3, 4, 5, and so on, so that we're basically now in an impulsive pattern that's bullish. I hold peanut options. They are not tradable. It's a shame, really. I didn't know that there were any. Maybe they had a split. They had a split. That's why the chart looks so horrible. And we have that outlier candle here that just ruins the whole labeling. And so I mean, I prefer, so like in the interactive broker account, I actually prefer, thanks for sharing the ticker, BNet1, I actually prefer to try to have like multiple income streams. So on one hand, to ideally, or if I hold the shares, to hopefully profit from an increased value in the shares while I'm holding the shares, to sell covered call options at a higher price than what I bought in. So to have like weekly, monthly, or even longer term option income. And then to ideally also have my shares lent out to earn interest on them. And if I don't hold the shares, to ideally earn interest on my cash in the account. But for that, we'll need more available cash. I see. So like whenever you have a split, basically the options are also split, but you don't have a market then for your existing options anymore. But yeah, like looks like right now at least I don't have any options for Barnes & Noble, which takes away one potential income stream. Anyway, moving on further, so we can then get to look closer onto immersion. And as said, so Faraday futures, there is a chance that this will turn into an upwards pattern. Yeah, where then the long-term outlook would be above $4 per share, which would mean, what's that then, 800% increase over the next couple of months or years. There's also a chance that this just develops into some ABC pattern, and then from here we go down further. So it remains to be seen which one it is. Yeah, we're just gonna hold the 200 shares we have right now because they were cheap and see what happens. Yeah, and GameStop, we're gonna, yeah, like, I mean, we now might have our wave 1 finished here, or wave 1, 2, 3, 4. So since we had the correctional drop here, so we should get a further push up. We covered GameStop also extensively over the last couple of weeks. Yeah, I think chances are now that we will finish above $30 by the end of the week. Yeah, GameStop crosses 29 right now. There we go, or touches 29. And yeah, we'll see if it goes above 35, since I sold the $35 covered calls. If so, I'd make a $5 profit per share, plus on top of that the premium from the call options, but the shares would get called away and free up the capital. Yeah, so I wouldn't mind that happening, but I'm also okay if we finish below 35 and I can sell new covered calls for next week. What else do we have? Green Wave. Yeah, still going downwards. We actually, 1 second, we're gonna check real quick. So how many of our shares were lent out yesterday, and what's the current net interest rate or net fee, so that we get daily yesterday view. So there we go. Where is it? Stock yield enhancement program. So we see from the 300 shares that we currently hold, so they are here. Yesterday, 241 were lent out with a net fee rate of 57%. That actually means that the short interest rate, or not short, but the interest rate people had to pay to borrow the shares was 115%, which is insane, which points towards the stock still being heavily shorted, although it doesn't move a lot. Yeah, we're in a monthly chart. That obviously also makes a huge difference. But still, it doesn't move a lot despite being heavily shorted. So I think it's a prime candidate. I mean, again, it's just my opinion and no guarantees here, but I think it's a prime candidate for a potential short squeeze. And I also think that their like business model, or like what they're doing, so in that case, recycling metals in the US and so on, is not very bad and has a decent amount of potential in the future. So I definitely, if we free up capital, also like increase my position here, simply because where do we have it now? I see a lot of upside potential. I believe that recycling in general, so recycling metals for reusing them or whatever from batteries and from other stuff, is something that becomes, in my opinion, more relevant in the future as well. And considering the net fee rate of 57%, it would mean if things stay like this and traders, investors, big hedge funds and so on keep shorting the stock, I'd actually earn 57% return on my capital just for having the shares lent out. Yeah. So it could drop by half in value, and I'd still be pretty much, it could drop by roughly 30% in value, and I'd still be pretty much break even on the position just from the interest from the shares being lent out. So I think that's something, like not too bad to have. And especially it's still cheap. We're trading below $2 per share. So even like $200 gets us 100 shares. Although we also have the downside that for Green Wave, we also do not have options. So we cannot sell covered calls to add additional income there, which is a little bit of a pity, but can't have everything again. Then immersion, as said, Yeah, as I said, I got out today at, what was it? So 13:45. Again, we're gonna circle back to it and look at it closer because I think we may potentially have reached the top of wave 5 here, which would then be followed by an ABC or another form of corrective pattern. Cost, the electronics and headphone manufacturer, still remains to be seen, but I think auto labeling thinks we have a big corrective pattern, so A, B, C, which also would still mean room upwards before we crash down. I consider it possible that we actually have an impulsive pattern, which 1, 2, and now basically 1, 2, 3, 4, 5, and then wave 2, and then blah, blah, blah. So going upwards. So we are going to hold the 100 shares that we have there. For now, unfortunately, also no options available to trade, so no covered calls to sell here either. And moving on. NEO, not that relevant. We don't hold many shares, but it still remains to be seen if our correction is finished here. I think as I mentioned in the previous episode, I think 2 days ago, if we manage to stay above the trend line, it would confirm that this is indeed 1, 2, and now we are getting the next 1, 2, 3, 4, 5. So for wave 3, 4, and 5. Or alternatively, A, B, and wave C, like the auto labeling suggested, which still would point to an almost 50% upside before we get or continue the downwards journey. So we're gonna hold a few shares further. And what else do we have? SunPower. There remains to be seen. I mean, we broke out from this channel that we have downwards here, which makes it possible that this was some ABC corrective pattern. We reached the minimum target for wave C that we statistically very often are supposed to hit. And we also basically broke out, had a small, not full retest to be honest, but we went down again, and now let's see where it goes from here. If we stay here, there is a chance that this turns into a big 1, 2, and again then 1, 2, 3, 4, 5, and so on, where we also would have long-term the next wave 3 target, if that is indeed 1, 2, and we get wave 3, the wave 3 target would obviously be above $7. Which is more than 200% potential return in the next couple of months or maybe even years. So, I mean, those patterns may take time to play out. Either way, definitely not bad. And then Standard & Poor's. Oh, yeah, I completely missed that. Happened today. Okay, today we had a huge pre-market drop. I mean, we don't have capital free for now, so we're gonna more or less be forced to ignore this a little bit because we anyway cannot trade it. Our high is here. We already dropped to the 61.8. It's possible that this is already the whole ABC pattern for the entire correction. It's also possible that we have 1, 2, and that's the next 1, 2. I don't see us dropping much further here. A critical point would be if we break the 555. That would be another 1% drop. In that case, we definitely would get a bigger corrective pattern. As long as we're above 555, I consider the option that this is just like 1, 2, and we basically will go to the next all-time high. It's definitely worth checking that out closer or actually further, so to work our way down again from a monthly or a daily or weekly or daily chart. But since we currently don't have the funds to anyway participate in that whole journey, it's, I think, not worth the effort. Or I currently don't have the available funds. Now back to immersion we go. And on the other hand, I'll just have to finish something. So while you guys can admire the chart a little bit, we're going to zoom in for now to make it at least a little bit more interesting. Just need to do something on the other end real quick. And drink something. Don't forget to hydrate, guys and girls. So let's see if that works now. Total empty. Okay, that one created. Okay, done. So our next bottle. And yeah, so now I said for immersion, we're going to zoom out. Let's start with an incredible yearly chart. So where we already have our rough estimate, and we're gonna work our way down from here. So maybe we do it twice, and we do it once with auto labeling, and then a second time with manual labeling. For that, get rid of that, and let's throw auto labeling on the chart. And the starting point would be potentially January. And now we have a yearly chart. Yeah, let's switch to monthly to get a few more candles. And we'd label from September 22. So I'll have to update that, but not this, but that. Oh, 2002, yeah. So 2002, September, apply. So that's a weird labeling. It would assume that the end of wave 2 is actually here. And that we're now in wave 3 so that we have room to grow. Okay, so let's make our own labeling. So first of all, it looks like we have a 1, 2, 3, 4, 5 in here. So a 5-wave impulse, which would give us the idea that that here is basically, I'm going to label it in a second as well, but that is basically our wave 1. And if we have a wave 1, we expect the retracement to happen after that for a wave 2 that hits our, or turns around at one of our common retracement levels, 38.2, 50, 61.8. Looks like we hit, I mean, we broke through obviously temporarily through the 61.8, but it looks like we bounced from here. Now, obviously, corrective patterns are the hardest to label. They're super pain in the ass. It's possible that the whole wave 2 pattern is some combination and is actually bigger. Yeah, we'll just, that we usually learn in retrospective. So hindsight is always 2020. For now, I'd actually assume that we have wave 1, wave 2, and are currently in wave 3. Yeah. For wave 3, our usual profit target would be the 26.18 extension. Now, don't get too excited. We're right now looking at a monthly chart where everything takes relatively long to develop, and yeah, so it's not gonna, I don't know, achieve, what's that, like 4,000% or so in a month or a week, even if I'm right. So it would take a long time, but it would make a good long-term value investment. Yeah. There's still also the option that the pattern turns into an A, B, C, in which case, however, still, if that were the case, we would assume then that would be our wave A. That would be our wave B, and our profit targets for wave C would be the minimum profit target that we already hit now almost 3 times in a row. I have to consider that, and the maximum profit target at around $50. Yeah. Either way, so like that would be the area if we hit this and then turn around. There's a third level for wave C, by the way, which is the 1618 extension. So theoretically, only if we break above 320, and that's an insane increase. Again, we're talking very, very long term here. Would I assume that we definitely have an impulsive 1, 2, 3 pattern? And again, we're talking about very, very long time here. So yeah, who knows if I'm still actively trading if and when that happens. Yeah. So, but for now, we assume at least that this is wave 1 and 2, and that we're currently in wave 3. So, yeah, nice, got money. Which means the next step is then where are we in that wave 3? Yeah, so, and I think visually we have a 1, 2, 3, 4, 5 here. So we have wave 1 down here already done. Yeah, I would say it like this, although, oh no, there we go lower. So it would need to be a diagonal. Okay, so that would need to be a leading diagonal because our wave 4, so we'd say it be roughly like this. Our wave 4 enters the price territory of wave 1. Yeah. So, and if then that would then be our wave 1. And then we would need to have a flat corrective pattern here, a combination of a corrective pattern. So to make this work in quotes. That's the lowest point. Or do we have a low point here, 423, and here it's a little higher, I guess. No, both are 423. Okay, so I would then assume that basically what we have here is our next 1, 2, and now we're in wave 3. So we should supposedly be degree, that's not cycle, but yeah, let's actually, where do we start? So the biggest one would be cycle. Come on, go there. So this one would be primary. Yeah. So then we assume that we have a corrective pattern here, and we would assume that we have the next 1, 2, 3 here, where I assume that this is 1, 2, 3, 4, 5 for another wave 1, 2, which would actually give us then, which would actually give us a profit target at 32. Yeah. So, and if we look at the retracement, I mean, that's based on the monthly chart. So again, talking about multiple months development, we retrace to the 50% retracement level here, which would fit for a wave 1, 2 if we use Kennedy channeling technique. So on a bigger scale, so let's start with, I think on the biggest scale, it won't work out because there we're not in wave 3 yet. If we take it here, so on this level here, so 1, 2, we would actually wait or need a breakout from this channel. So at the $30 mark to confirm that we're indeed in this third wave. And then we'd have to monitor it to see where it goes from here. So now I'm gonna unextend that channel so it's not interfering with the rest. We're gonna switch to a weekly chart and just quickly adjust that. Now here, as said, I think we have the next wave 1, 2, and are now in wave 3, 4, 5. And based on Kennedy channeling technique, might have actually sold too early today. Yeah? So because it looks like we now have our breakout from the base channel, which confirms the third wave. So there should be potentially a bigger push still coming. And what we'd have to do based on Kennedy channeling technique would now be to watch this like that and basically wait for, so whenever we have a new top, we move it further up and wait for a breakdown to the bottom. But from the looks of it, so from the extension level, we'd expect the 27.27 to 32.81. And from Kennedy channeling technique, that would also work because then basically our channel would potentially look like this. But you can already see that would be till next year, for example. Yeah, so you can see that here, it simply needs time, and we're on a weekly chart right now. So it looks like I sold too early today, although we sold at 1345. So, and we had what, 10 shares. So, no, I didn't even have, I had 5 shares here. Yeah, we just bought for $50. So, mid price, submit. So, there we go. Okay, let's offer the ask. There we go. So we basically re-entered for the 5 shares and got a small profit along the way. The main reason why I decided now to re-enter is basically the pattern that we see right now. So we can assume that this is 1, 2, 3, 4, 5. And then there are some corrective patterns. So for wave 1, 2, where we then either we turn around here, that would be then bad luck. I mean, I got a couple dollars, or not even a couple dollars now. Yeah, like, or really a couple, yeah, like $2 or $2.50 in profit in the pocket. Okay, great. Minus commission, so plus minus 0 actually. But from here, that's like the first target area where we could bounce and get our wave 4. However, if we use Kennedy channeling technique, we expect the breakout from this channel. And again, for the wave 4, we actually expect to reach a point where we then break out to the bottom. So, and very often the third wave turns around at the 2618 extension level. Not always, but often enough. that we can actually consider that our, in quotes, profit target. So 32.81. There's also sometimes the chance that we shoot through this level and reach the next 382 or 618 extension level. But more often than not, the 2618 extension level is, in my experience, the third wave target area. And so we'll have to keep that in mind. Yeah. And however, we can still look closer, because that third wave also has to subdivide into 3 waves. So maybe my exit was actually good, and now looking closer is what's gonna confirm that. But okay, that's our, sorry, I have to move out again 1 second. So that's our current acceleration channel. I'm gonna remove that, and we're also gonna unextend this one so we can work better. And that one's a little tricky on the daily chart with that spike in here. Unless that's 1, 2, 3, 4, 5 with a truncated 5th wave, which would make that the next wave 1 potentially here, with wave 2 ending here roughly. So we have our new base channel, we broke out from it. And if that's the case, we'd have our profit target based on the daily around the 1575. And then from there, now where do we go? General. So we would now basically wait to get a correction that breaks through the bottom of this. I wonder, I'm gonna set my, now, do I want to 1575? I mean, it's just a handful of shares, yeah. I think I'm gonna just hold that from now on. So like, I mean, while I was, in quotes, lucky to buy and sell the few shares, or sell the few shares today and buy them back slightly cheaper, but looking at the pattern, so if we look on the monthly chart, it looks like we have 1, 2, and now in the third wave. If we look on the weekly chart, or even still on the monthly, we see that then in that third wave, it looks like we have 1, 2, and now in wave 3, which makes this a third wave of a third wave. And then if we look on the daily chart, we see that we have potentially 1, 2, and in wave 3, so we are in the third wave of a third wave of a third wave, so which would indicate, not guarantee, strong movement. And then within that third wave, it looks like we might also just have wave 1, 2, and now wave 3. So for a third wave of a third wave of a third wave of a third wave. So overall, there might be much more upside still. And a pity that how much? I mean, yeah, just 1 extra share. Yeah, great. Yeah, so then we leave it like this. So we hold our 5 shares. But I think that there is today. No, where are you? Oh, that one we don't need anymore. Yeah. I think that there is still more upside in this movement. If we consider this our wave 1, 2, and then we might have basically in here 1, 2, 3, 4, 5. So we already got a drop today, but maybe there's another drop that takes us a little bit down. So what's that then, like 10% or a little bit more than 10% down for a wave 2. And then potentially we are in the third wave of a third wave of a third wave of a third wave of a third wave. Yeah. So, and should then get the push further up. And on the daily chart, I think that's already fairly reasonable to like not assume, but to trade based on that. So yeah, so in immersion, we're definitely going to stick with that. And it was my mistake basically on the previously we labeled it based on that drop here and the expansion up. So on the previous labeling, we somehow assumed that this wave 3, 4, and now we're in wave 5. But yeah, it looks like we're not, and there's still a lot of room to grow. There would actually be put. So if I manage to upgrade that to 100 shares, but for that, I would need to get my GameStop shares called away or close something else. So it would definitely, although the premiums are too low, so even the $15 premium only for like almost a year out, so 2/3 of a year out, pays like only $120 in options premium. So I think there we might benefit from waiting a little because the implied volatility should increase if we're right because of the strong movements, which should increase the option premiums. However, still have to see how this moves for the rest of the week. And if we are in quotes, or if I'm in quotes lucky, then GameStop will actually finish above 35. I'll get my shares called away, and then I can use a little bit of that money to buy another 95 shares of immersion to get to an even 100, which allows me to sell covered calls. Or even better, actually, once the money is available, I might sell cash secured puts. How are they doing for immersion? So how is the premium there? If we say a month out, oh, it's horrible. Okay, great. Not worth the effort then. Yeah. So selling $10 puts, really not worth the effort. So like it's like a 1% return, if at all. Yeah, that doesn't make it worth it. Yeah. But yeah, so I guess we'll have to wait and see. I think right now, actually, we have a bunch of positions that should move decently over the next couple of months. As that, for GameStop, we got the shares assigned at $30, so the shares are now pretty much break even. And we have the call at 35, which would mean $2,500 if we finish above 35 this week. And the shares get called away. If we stay below 35, we still have the shares and just pocket the option premium of $275 for the week, if I recall it correctly. And then we'll take it from there. Right now, based on the pattern, I mean, there's still a few things to wait for. The fact that we broke higher than this points toward the corrective pattern might be over, and the development here points towards this might be the next beginning of an impulsive wave, with that being wave 1, 2, 3, 4, and then push 5. And yeah, and so therefore we still have to wait a little bit and get a few more candles on the chart to be, in quotes, sure. But I think we are right now on the next upwards train. Yeah. Hi, Brodki, welcome to the stream. Is this working? Yeah. So yeah, what's my strategy? My strategy is to hold. I mean, there are like two different things. I hold an undisclosed number of shares in or at computer share. Those are like my long-term holds, where I just like depending on the price movement, set limit orders. So you can see even the alerts here. So because in computer share, you can only set so like if it trades at $29, you can set a limit order at roughly $200 sell price. And if it trades at $36, you can set one at, I think, $250 sell price or so. And it's not that I want to sell for that price precisely, but the issue is if we would assume there are no shares available and somebody would be forced to buy all of them or so, then if there is no higher priced limit order, then how is the price going to shoot up? Yeah. So there are certain price levels at which I basically list a few shares for sale to, if it were to happen, hopefully be part of the cause for a huge spike up. But other than that, the general idea is to hold. However, what I do in my interactive broker account is different from all of that, because here I just moved to interactive broker 6 weeks ago, and I'm basically selling cash secured puts. So for option premium, and then in that case, I got 500 shares assigned. Actually, 600 and 100 from them went to computer share as well. And then I'm selling covered calls against them. So again, for the option premium, where I'm fine either way. So since I'm bullish on GameStop, if the price goes up, in that case, above $35, and I lose the 500 shares and they got sold for 35, I'm okay with that. Or not sold, but they get transferred to whoever has the call option for 35. I'm okay with that. If we stay below 35 and I just talk at the $55.40 option premium times 5, so $275 in option premium for the week, I'm also okay with that. Yeah. So here in this account, it's it's like not exactly day trading, but mostly weekly trading in quotes. So like figuring out which put options I can write in stocks that I don't mind holding to get the most in option premium. If I have the shares, figuring out which call options I can write to get the most in option premium, and either to still make sure I hold the shares or to make sure they get called away. So and with a few minor plays and stocks that I think have potential or might or heavily shorted. Yeah, Hari Makwana, welcome to the stream. Yeah, we're actually pretty much at the end. I mean, we covered most of the positions that I'm holding. We covered immersion in a little bit more detail today and my forecast for it. I know that looks confusing if you're just seeing it, but so now that's up 1 second. But yeah, if you rewind back in the stream, you'll get the explanation. GameStop, I said I'm bullish. Big question is just, will we finish above 35 or not this week? Considering that I'm using Elliott Wave Theory or the Elliott Wave principle for most of my trading decisions, one would expect if this is an impulsive pattern that we get a corrective pattern that follows. So to retrace 38.2, 50 or 61.8% of the movement we made. And the question simply is this already an entire 5-wave pattern up and we get to expect a drop? And if so, will that corrective pattern finish before Friday and we get the next 5-wave move up? Or will that corrective pattern drag into Friday and we finish below $30? Yeah. So either way, for me personally, it's fine because I said I'm fine either way. If we go above 35, I pocket a couple $1,000 in profit from the shares and the shares get called away. And if we are below 35, I still have the shares with the increased volatility. I can sell again call options for next week for a higher premium. And yeah, so, but again, like there are two different things. So the shares that I hold as a long-term investment versus the shares that I got assigned here in my short-term portfolio. Yeah. One other core difference is, for example, also if you circle back to the beginning of the stream, that in my interactive broker account, for example, I on purpose have share lending activated because it causes an additional income stream. And yeah, like, so different purpose, different methods, and yeah. But I guess that's it for today. Like, one thing we can do, like, just to end the, or when we end the stream. So I said I switched to interactive broker. I just have to, do I have to hide that? Yeah. Can I just show that now? Of course not, yeah. Okay, then let's do it like this. So I switched to interactive broker pretty much 6 weeks ago. I mean, the 1-year graph looks a little bit different because I used it as a data source for my charting software before, which means I had to have like a minimum of $500 a year in balance. And then every month I just paid the fee, which as a percentage, however, makes it look horrible till I eventually then actually moved to interactive broker. And so like, yeah, 16th of May is I think the day I started trading on interactive broker actively. And we can see since then it's been going quite well. Yeah, if we just look for last month performance, it's okay. Month to date, definitely more than okay. And year to date, technically, yeah, like we could actually add the 12%. So we're at like 68% or so in the last 6.5 weeks. Definitely not bad. And yeah, on top of that, from all of that, I also was able to basically so far move an additional 100 shares for GameStop into my computer share account, where they will remain until we reach a value at which I'm willing to sell them. Anyway, that's it for today. Don't forget, so again, reminder, all the tools that I'm using, charting software, strategy, and so on, everything is linked in the description down below, so you can check it out there. If you are curious more about my, in quotes, more detailed forecasts for the stocks we covered today and a few others, then I would recommend you check out the episode from Monday. They actually went in a little bit more detail with many of them. Other than that, the next episode is going to be tomorrow, as usual, around 5 minutes before the market opens. And yeah, with that, thanks for tuning in. Thanks for interacting in the chat. And good luck to all of us in terms of our predictions for the markets. And see you all then potentially tomorrow with another